I think that we're going to go through the biggest short squeeze in history. And what I mean by that is I think the US dollar is going to get squeezed much, much higher. And it's going to get squeezed much, much higher because despite the fact that many people don't like it, would prefer to have an alternative, that they just don't. And the rest of the world, the US and the rest of the world has taken out an incredible amount of US dollar debt. That debt either gets paid off, serviced, or defaulted on. And the only way that that isn't extremely dollar positive is if it gets paid off. I don't see how it can get paid off. There's just not enough dollars to go around.
This is only going to ring fence the dollar's superiority. The bigger the global meta crisis gets, the more people realize there is nothing else you can turn to. Nothing. Gold won't help you. The ruble won't help you. The renminbi won't help you. The yen's no good. The euro's no good. You may not like the dollar, but there is no alternative.
Hey guys, Ed Bugos here. I'm the co-founder of the newsletter and Jeff's partner at both the TDV and the TCV newsletter, which we launched a couple of years ago. Is it a couple of years ago now? So I write the economic review for the Dollar Vigilantes twice a month, and occasionally, if I get a chance, I'll write the macro review for the Crypto Vigilante, which you shouldn't miss. There's good stuff in there. I started as a stockbroker just in my 20s, and I ended up finding my calling here and decided the business. I've covered the dollar collapse story for 22 years. I've been involved with several financial newsletters too, I should say, before starting this third one with Jeff in 2010. If you want to see what else I've done, just check out the link below. It'll take you to our website and a bio. I've been an investor and a trader for decades, so I'm sharing all that experience with you. I'm also a passionate student of history and economic theory and things like that. So I've traded the dollar collapse story, which I've been covering in one way or another, in one manifestation or another. I've traded it for 22 years, as I said, and I've traded it largely with success. But this year we got kicked in the gonads because the Fed and the dollar both outwitted us. Some things we did not expect happened. For the most part, we have acted to try to hedge the situation by shorting the everything bubble, the NASDAQ bubble. And we did that with great success, but it still probably only just barely mitigated some of the losses overall in everything, right? It's straight out deflation policy. That's why everything is falling in value. Even though it's not a massively deflationary policy, they wouldn't let that happen, don't worry. For all the talk about how much they want to bring down inflation, it's funny that inflation is still up at 7.4%, and they're already starting to talk about slowing down the rate of pace of rate hikes. If they really wanted to, end inflation, we all know what they would do: just shut down the doors, right? So, in light of what's been going on with the dollar, you see this trade-weighted dollar index here. You can see it's been on a tear. It's an extended bull market. It's lasted 12 years now. So in light of this situation, should we throw this dollar collapse theme out the window? Does it matter anymore? Is it relevant? To be fair, Jeff and I said that it had another life in it when we started this. So, I'm going to argue today that the dollar collapse theme is especially relevant today because a lot of the ways that everything going on in the world, a lot of the chaos that you see happening around the world is not unrelated. It's not unrelated to the degradation of the dollar. The gains in the foreign exchange market only blur that kind of thing. So the problem is that all these currencies that we're dealing in, all the fiat currencies that we've been stuck with for 50 years or so, they're in a state of collapse, all of them. So when one of them rises on the foreign exchange market, it's just all because it's falling less fast than the others. That's all it is. And that blur is important, though, to how the system has extended itself beyond the gold standard. Okay. So when I talk about the dollar system collapsing, I don't mean just the dollar collapsing on its own. The other currencies couldn't last without it. The system has been able to last because of a symbiosis between both sides, right? So the fiat currencies on the one side find that the dollar is more elastic and forgiving than gold. The dollar on the other side finds that the benefits from the reserve demand expressed by these currencies who are trying to get market share into for their exports. The point I want to make here is that it is a mutually beneficial system. It's collapsing since it's left the gold standard. 50 years is not a long time in the space of history. The system could theoretically last as long as the reserve currency isn't destroyed or rejected. But here's the thing: the system has created so much debt and government on the back of it that it's pushing us to those ends, right? So whether the dollar is too strong or whether it's too weak may not make a difference to whether a nation that uses it as a reserve currency is supposed to reject it as a reserve currency. And if it does that, then you're going to see that on the foreign exchange market. No other currency has that situation. No other currency faces a situation where it could possibly be rejected as a reserve currency. Well, outside the euro and the yen, but they have such a small foreign investors have such small shares in those reserve currencies, comparatively speaking. Okay, so let me move on before I bore everybody to death with this monologue here. We have a couple of young analysts with us from TDB. They've worked with me for the last year, a little bit over a year now. Love these guys. They're really good at what they do. I can't operate without them. And let me just introduce them: Mike Benke and Josh Thompson. Do you guys want to kind of say a few words and tell us what you do and so forth?
Sure, I'll hop in. My name is Joshua Thompson. I think I got started on my path or my journey here by reading Doug Casey, and then I ran into Jeff Berwick up in New Hampshire at PorcFest, ended up going to the Acapulco meetup for the first time. And then I was a subscriber and I started messaging Ed all sorts of questions about economics and trading and markets. And he would send me videos and paragraphs to read and books and articles. And I stayed on top of it. So last year, started working for Ed with Mike, and it's been a very educational experience. We all look at a variety of markets and economic data from around the world, but I like to focus in on the mining sector and spend a lot of time looking at drill results, reading corporate profiles, and just trying to find something that the market has missed so that we can make a recommendation. And of course, we all review those as a team. So go ahead, Mike.
Yeah, my name is Mike. Probably my background in economics goes back to my early 20s when I didn't know much. I had a little bit of blind luck in the real estate game, and thought I had discovered something and invested more into real estate, only for 2008 to happen. And needless to say, it didn't really pan out very well for me at that point in time. It was a bit of an eye-opener that I really didn't understand economics at all. And so it started what would end up being a long journey of discovery, which led me to gold, to crypto, and to eventually the TDV, where I was a subscriber for several years before, like Josh, COVID kind of flipped my life upside down, and I was for the first time in my adult life looking for new work, just when Ed was looking for an analyst. So very grateful that I'm now part of the team. I'm a junior analyst, a writer, a researcher, and even support the team with some graphic art as well. And yeah, that's my story.
Great, guys. Awesome. Thank you. I appreciate that. Mike has got a creative side to him. If you haven't already figured that out, he's created cover page for the Dollar Vigilante newsletter for the last year. He's also done the same for the mining and exploration and the special reports that we do. We've got a report coming out on the gold-backed crypto area that is pretty exciting, and he's put together all of that, including the content. While we won't be necessarily recommending pushing any of the gold-backed currencies, it will be sort of an overview of the whole sector, and there'll be some rankings, and you know, some of the coins will have a page with features that we've identified for them, so you can compare which coins you might want to try. And potentially, gold-backed crypto can be a better alternative than the other stable coins that have been the center of so much controversy these days. And Josh helps us with the mining and exploration monthly every month. The content within there, he scours the Canadian wires for exploration drill results. I think he basically looks at every drill result that is released, and we filter them. He filters them, and we discuss them. And the ones that make it into the mining and exploration monthly, he writes up a little synopsis for you if you are interested in very, very early stage stuff. Josh also found our latest pick, which I won't mention the name, but you should check it out. It's a nice little miner with a mid-tier miner that has some assets in Bulgaria, some in South America. I don't want to give you more information to protect our premium subscribers who pay for that stuff. But if you're a premium subscriber and you missed our latest pick, just hit the website and check out the stock portfolio. You'll see it there. So Josh and Mike are going to pepper me with some questions here, and afterwards, after that, I will present you with my fundamental premises in defense of the dollar collapse story, because it is relevant, and it's where it's important to discuss.
Okay, thanks, Ed. All right, let's jump into the questions.
And the first one is about the dollar shortage. And one of the main arguments for that is that as the FX value of the dollar rises, it squeezes offshore borrowers who have to pay back debt in dollars. Do you think that this has been an important factor for the dollar's recent strength? And do you think it will increase as we go forward if the dollar keeps rising?
To the first question, no. I don't think it's behind the dollar's recent strength. The currencies that are really collapsing against the dollar are the other reserve currencies in the DXY index, in the trade weighted dollar index, not so much any of the emerging market currencies per se. And the reserve currencies that are doing the worst right now are those that have been experimenting with negative yields in recent years, in my opinion. So the total debt in dollar terms outside of the U.S. economy, which is what's important when we're talking about foreign demand for dollars, is 15 to 20 trillion dollars. The total amount of global debt is 300 trillion dollars, private and public. Okay, so it's a small drop in the bucket, comparatively speaking. That line of thinking also, it assumes that the people who are borrowing dollars offshore don't hedge their position. Okay, it assumes that these dollars are going to be repaid, because if they're defaulted on, there's going to be no demand for the dollars to be repaid. And it assumes that these debts are not going to be rolled over too, right? It assumes that they're not going to just say, well, okay, it's due, so let's just roll it over and increase the amount, which is kind of the way the game is played anyways.
Right. Okay. So if that's not pushing the dollar up, something is. And do you think, what do you think will reverse this high dollar demand? We're seeing the dollar start to roll over here potentially. What do you think is causing that, and will it keep going?
Well, what is driving the dollar is as I said, so the problems with the currencies that experimented with negative yields, but also capital flight in the last year, especially. We've seen this capital as a result of the Ukraine conflict, for example. That was sort of a catalyst. So you saw a lot of capital flight coming into the dollar, which has been sort of the dollar's benefiting the dollar for much of the last 12 years. Capital flight from the EU crisis early on, and now from Europe because of this conflict. Anyways, so that's what's been driving it. And what could reverse that is simple. It's a break in the Fed's resolve to not pivot. Okay. It could be a rejection of the dollar as a reserve currency, as we've seen some people scratch their heads recently and think, well, maybe we should have a different reserve. The dollar seems to be a little bit troublesome. Don't forget that, like, the more the dollar rises, like this, especially with higher interest rates, it's also going to make it less appealing as for borrowers, right? One of the things that made it appealing was that it hadn't been rising so strongly, and it had such low interest rates compared to the alternatives. What's going to sustain that dollar demand when the U.S. markets really turn down? Because so far they haven't. They've turned down, but they haven't really turned down.
Yeah, I remember the chart you showed for King Dollar that I think the U.S. has some 18 trillion in owed liabilities abroad, which is almost about the same as U.S. dollar denominated debt, which
No,
isn't even owed.
It has 50 something trillion in claims against U.S. assets. The 18 trillion was the net figure.
Gotcha. Yeah,
right?
Yeah. So there's plenty of dollars moving outside the U.S. as much as coming in. The second question is about the milkshake theory, which says that the US dollar and US equities are going to continue to benefit from capital flows from foreign governments as they run into debt problems before the United States. We're starting to see some cracks with Credit Suisse and the UK pension funds. But this, I guess, theory really rests on the idea that the US inflates less than the rest of the world, and therefore the rest of the world is going to pay for it before we do. What are your thoughts on that?
As far as the milkshake theory goes, it seems to kind of fall on the fence of what I would call the global fruit fallacy. If what it means is that it takes all of the inflation from everybody else and adds it all together and says, wow, there's a lot of inflation offshore, compared to how much the Fed inflates, well, then I would call that a very fallacious argument, right? You can't really add different money supplies together and so on, because these things all work themselves out in the various crosses. And the other point is that the U.S. is the largest debtor by far. If anybody's going to run into trouble with their debt situation, it's at 4 or 5% interest rates, U.S. interest rates. It's going to be the U.S. They've got a larger debt to GDP ratio than everybody else, except other than Japan. I mean, the U.S. economy is the land of malinvestment, the home of the biggest asset bubbles, and of the most overpriced government debt in the world. So there's a lot of problems still to come there.
Well, Warren Buffett is quoted as saying, I'm pretty sure, never bet against America. And despite a lot of the available data, the world seems to think that the US economy is the strongest, can hold out the longest. I mean, we deleted recession from the dictionary practically. We're on the path towards Benke's dream as a world with no recessions. Do you think any of that is reasonable? I mean, like, it's hard to bet against the U.S. economy,
It's all gobbledygook. First of all, absolutely, if you take a static view of everything, the American economy is probably still well positioned. It's it's got the best, deepest markets. All of that stuff is true. But this is not how currencies work. They don't work in a status friggin' world, Warren. The value of a currency has absolutely, Mises has told us the value of a currency has nothing to do with the health of an economy, only the supply and demand of the currency. itself has to do determines the value of the currency, right? So that he said so that a strong economy can have a poor currency and a weak economy can still have a sound currency, even though whatever. But that was his point. It was that the value of money has nothing to do with the strength of the economy per se. Just a demand and supply for holding cash balances. Period. Aside from that, let's just say that. How can the economy be strong? How can anybody say that the U.S. economy is strong when they've had to have, for the first time in its whole history, the central bank has had to keep interest rates at zero for 14 years, most of 14 years. One time they tried to raise it to 2%, they chickened out. How can you say the economy was even growing? If it was growing, then the policy was not justified. They should have lifted it long ago. So just the existence of this stupid policy for so long anybody who says the economy is strong is a freaking idiot. Okay. So
Those are fighting words.
They are, and I'm ready to fight with these guys. I mean, history is littered with pompous claims by pompous central planner bureaucrats imbued with the fatal conceit, right?
Yeah.
So,
it's easy to be extra bullish at the top too.
The U.S. has led this boom both up and down. It's an unsound boom, right? It's not growth. It's an unsound investment boom. It's unsound because it's unsustainable because it's been created by the manipulation of incentives in an unsustainable way with an unsustainable policy. So.
Yeah. Okay. Well, we brought up interest rates there, and the 14 years at essentially 0%. Well, interest rates are going up, and there is a belief that the strong U.S. economy can take higher rates than foreign economies, which ironically I see a lot of much higher rates in foreign economies. But let's talk about kind of the major trading partners. Do you think that if rates continue to rise and if U.S. rates continue to be above those of the other larger economies, can that keep going? Is that going to break things here, or is it going to break things abroad first?
Well, the direct answer is I still think the U.S. is going to destabilize first and most, and I think that's going to happen soon. Having higher rates does not actually reflect a strong economy. An economy that's actually strong is going to have lower rates. It's going to reflect low time preferences for individuals. There's going to be lots of savings in the economy, lots of capital. Economists have shown that that in an evenly rotating economy, over the long run, interest rates are just going to fall. Okay, like if you look around the world, even the countries with the highest rates are countries who inflate too much, or countries where there's some sort of a huge risk premium that are undeveloped, emerging, etc. So higher interest rates don't reflect any economic strength, and as I said, the boom is on very unsound footing. There's no way that an economy can strengthen, improve as a result of the kind of monetary policy they've had for 14 years. That beats on capital. That beats on growth. It taxes growth. There's no way to just, raise interest rates and say, okay, now we're going to have growth, right?
Yeah.
First, you got to
the liquidation phase first. The malinvestments have to get washed out.
If the U.S. maintains higher rates than others on a real basis, I'd be really surprised. But if it does, what it really means is that the savings, it's a signal. It means the savings pool needs to be replenished, right? Mm-hmm. Replenish it, save people. That's what it's saying, right?
Yeah.
Anyways, whatever you say, Ed, the Keynesians say that, we can raise interest rates and the economy is going to be able to withstand it. How are artificial rate hikes any different than artificial rate lowerings? How does the economist know, or how does the central planner know the right interest rate to push up to?
On that, if rates continue to rise in the United States and it starts to cause economic problems, Don't you think? I mean, I feel like we've just been seeing bailout after bailout since 2008. If it's not this company, it's another company. Do you think they'll be able to plug all of the holes, as rates go up?
Historically, bailouts have meant money printing, so money printing kind of lowers rates. I think that what's the word I'm looking for? Neutralizes the rate hikes, right?
Yeah.
So there's limits. There's limits to how high interest rates can go. Okay.
How high do you think they will go here on this run, or in the next couple of years?
To be honest, they're higher than I thought they could go without causing a bigger crisis in capital markets already. If because I mean, we're at 4% on the Treasury bond, and and the Dow dividend yield is at 1.7%. So with risk, volatility. I mean, I don't even understand why there's not an en masse run to treasuries right now. Such a good deal, compared to what you're going to get in stocks.
I think everyone's still in the I don't know what the opposite of the word honeymoon is, but everyone's still in this kind of belief that this inflation and rates is transitory. It'll come down. The Fed talks about how the long-term inflation expectations are still intact, and that's the main thing they want you to know. Do you think that those long-term inflation expectations are that important, and what do you think will happen, or what could cause them to change, and what will be the result?
I think that the long-term inflation expectations are a byproduct that they don't like. I don't know, this. I know that we track the surveys that try to measure these things, but I don't know how much confidence to put in those things. In the end, I look at interest rates themselves as giving us the right survey response to questions like that. So inflation expectations, we said that they would be stubbornly high, they would remain stubborn. We thought that inflation would remain a tougher problem than the Fed could imagine. But the market still believes that the Fed can bring down the inflation problem without hurting the economy. And I see lots of data that points to why that is wrong. I see a lot of data supporting our case that the economy is falling apart faster than the inflation narrative. But the market is being conditioned by these guys, right? The Federal Reserve comes out and hikes interest rates 75%, and then it comes out afterwards to prevent everybody from speculating that that's the last rate hike. But in the statement, it says, well, we're kind of judging whether it's going to be the right rate hike. I'm paraphrasing. So that they're leaving a lot to the interpretation of the market, whatever interpretation the market wants. Some people will say, "Oh, that means there's a pivot tomorrow." Others are going to say, "Well, it looks like they're going to keep raising," and that's how the Fed wants it. It doesn't want it. It pretends to be transparent, but it's not. It doesn't want to be transparent. Yeah. It can't be. If it was truly transparent, it'd have zero value even to its own captors.
All right, I think that sums up most of the dollar short and treasury questions. I think Mike has a couple more questions, so I'll pass the torch to you.
All right, Ed. The first thing I want to talk to you about is the mindset that people have that the dollar is king, and it's always going to be king. It's the world reserve currency. It's central to the global financial system. It's backed by force, a strong U.S. economy, a strong consumer. In times of uncertainty and crisis, like we're seeing right now, people seek it out as a safe haven. With deflationary pressures like we see right now, people are selling assets for US dollars. With that, my first question is, given everything I just said, how would it be possible for the US dollar to lose value in this environment, especially when it's compared to all of these less sound currencies?
How does it lose value? Lose value in this last bear market, 2001 to 2008? how did it lose value in the bear market it had before in the 80s, in the late 80s, early 90s, or in the 70s? All of these bear markets were against currencies that were less sound, as well as some currencies that were more sound. How did it lose value in those times? Is capital flows. Capital flows back and forth. There are times when the American markets are really the only game in town and outperform all the other markets, and everybody chases them. And there are times when other markets, like during 2001 to 2008, I remember many people were buying the European shares and the commodity currencies, because we had a commodity bull market. They were buying China, they were buying India. So that's the reason that the dollar's value can fall, is cyclically, because as the world's largest net debtor, you can see a graph of what I mean here. The net international investment position is basically a balance sheet, and the balance sheet shows the difference between claims that Americans have, investments they have overseas, and the amount of investments that foreigners have in America, or claims on American assets. So what this graph shows is that the stream of dividend payments and interest payments is increasingly going, not favoring the dollar. Is it increasingly going the other way? We've seen the dollar lose value to less sound currencies before, just on a cyclical basis.
Yeah, no, I think that's a great point. I think many people forget that that the U.S. dollar hasn't always been king, and that it is cyclical with bull and bear markets. For the reasons you just outlined. However, I think many would argue that this time it's different. And as the dollar collapses, or as the fiat system collapses, I should say, people are going to be wanting to hold king dollar at the very end. So do you not agree that as other currencies collapse, the king dollar will be king?
No, of course not. If we want to talk about in terms of its circulation, it is king. It has the most circulation in the world. But as you can see in this graph of the reserve of its share of global reserves in the whole spectrum, it's been dwindling for decades, right? Even through the bull market in the foreign exchange value of the dollar over the last 12 years, both its investment position and its reserve position have been declining. A rejection of the dollar system can occur either in reaction to it being too strong or too weak. And ultimately, when the system is rejected, that's when you're going to see when users reject this system, ultimately, when they one by one say, which has been happening gradually, right? And you can see that in the chart of its share of reserves. So far, it's been going on gradually, but the thing about this is that the rejection of the dollar as a reserve currency will wash up a lot of currency onshore. So it will reflect in the foreign exchange value of the market. So the system, when it collapses, if it collapses, any kind of rejection, whether it's because the foreign exchange value of the dollar is strong, or because it's too weak, either way, that causes stress, that causes people to rethink, well, do we need the dollar as a reserve currency? Either way. So the authorities want the status quo. They don't really want that kind of volatility, because that is what's going to reject the dollar as a reserve currency. And the more that happens, the more dollars there are sloshing around out there outside of the economy compared to other currencies.
You make the point that that there's a trend of the U.S. dollar not being a reserve currency, but that trend's been happening for a little while, and so I guess I don't understand why you think we're any closer now to users rejecting the U.S. dollar than we were, let's say, a year ago or 5 years ago. So my last question for you is, what is it going to take for U.S. dollar users around the world to actually reject it?
What would it take to happen is, in my opinion, when the dollar is very, very weak, and it creates a different incentive. It creates an incentive for all the other central banks to inflate more, and that's when the system, to me, is much more destructive. But it could be gradual. it could be gradual, it can continue gradually. I can't rule that possibility out. But what I've noticed is that the floating rate system has done a lot to manage a lot of the imbalances and extend the life of this system. But it has also created a few cancers. One cancer is the debt, and the other cancer is the size of government. And in each case, because that's what inflation and taxes funds. And we can see right now how the debt situation is playing out for the Japanese, because one of the reasons they can't afford to raise their let the market raise the rate or yield on the 10-year bond is because they can't afford to issue debt at higher interest rates given their 250% debt to GDP ratio right now. So the US is at half of that, but the US is the second behind Japan in terms of that ratio, but worse in terms of total dollar number, it is bigger than anybody. You know, as you saw with the net international investment position, Japan at least is a creditor nation, right? And it doesn't inflate nearly as much as the US dollar.
And so if I understand you, if the whole system is to collapse, it'll probably start with a US dollar bear market. And then which will eventually result in a rejection of the system by its users. And then maybe one day we wake up to see things priced in gold or Bitcoin.
Can I interject? The bear market in the US dollar doesn't need to be the thing that starts off the rejection. It could be this current situation could start off a rejection, but once users reject it, then the foreign exchange value of the dollar will reflect that, because there will be a lot of surplus in the foreign exchange market.
All right, Ed, I want to talk about a very common belief out there that the U.S. Can prevent the dollar collapse from happening just by use of military force. It's well known that it has the largest military budget in the world by far. I think if you add up the second and third nations, it's bigger than those ones combined, which has allowed the U.S. to amass an absolutely huge arsenal of weapons and military technology that's arguably unparalleled in the world. And you could also argue that many nations have already attempted to bypass the U.S. dollar in global trade, whether we talk about alternatives to the SWIFT system or countries looking to bypass the petrodollar. However, for some, these efforts really didn't pan out very well, right? Like think about Iraq or Libya. Okay, so my first question is, should there be any serious attempt by any other nation to dethrone the US dollar? Those efforts are going to be met with the full force of the US military, and they're going to fail, right? Like, do you not agree with that?
The historical example probably would support that statement to some extent. Yeah, they could probably use the military in that way, but might doesn't create. It destroys. Force can't be used to create a currency. It can only destroy it, right?
No, that's true. I mean, that's true. No amount of force is going to create a currency out of thin air, but that's not what we're talking about here. We're talking about the US dollar, and it already is a currency. And so the military in this case isn't going to create it out of thin air. It's going to be used to squash the competition. So how could any currency challenge the US dollar without meeting that fate?
I have a number of responses to that, but let's point out that every empire sort of dies when it has stretched the limits of its finance, right? Of its finances. Okay, can we agree on that?
Yeah. Yeah.
Right. Eventually, empires spend and inflate too much, and that sort of sows the seeds of its own demise. Okay. Sure. So the more they destroy the currency, the less effective that can be. In most cases, the dollar's reserve status doesn't even require any sort of military, because the dollar became a reserve currency on an economic foundation. It didn't become a reserve currency by force. Okay, it's the other governments accepted the fiat dollar as it left gold because of a mutual beneficial situation. sort of a symbiosis there. But the other thing the military doesn't have to worry too much about is that most governments inherently don't want to go to a gold standard. It's very rare that you get a government that wants to have a gold standard unless it's sort of a bit of a phony gold standard and they just want to intimidate the empire, right? The whole point I'm trying to make here is that the system is very the reserve currency system that the dollar is at the center of is very mutually beneficial. You don't need to enforce it with force. There are incentives on both sides of the cross that want to extend its life further.
Well, yeah, I guess what you're saying is, none of these other nations really actually want to dethrone the dollar. It's another advantage to still have it there. So perhaps what replaces the U.S. dollar isn't even a government currency. Maybe it's something that the market provides. But do you not still think, though, that no matter where the competition comes from, and that the military strength will at least be able to delay adoption of this new currency, or even the emergence of new currencies, maybe just for a few years, or maybe even for a whole decade, right? Like, can our whole dollar collapse theory really just be extended into the future, by a decade?
Oh, by a decade? Well, I mean, I don't really know. I don't have an honest answer for that, because with the military, I don't think so, because I think the whole idea of empire is starting to contract already. It's very hard to justify the use of military these days, although some of that's come back lately with the Ukraine conflict. But it is one of the ways they've extended the system. Okay, and you know what? I ultimately agree that ultimately the challenge to the system has to come from the market. Okay, it can't be overturned by force either. Okay? The users of this system have to reject it, and to that extent, the more imperialistic the military is, the more it encourages the rejection of the system as well. So it can't use force. It can't rely on force too much, especially when at the same time the authorities are destroying the currency internally. Right?
Yeah, no, that's a good point.
They've already destroyed the system, and with the cancer that's built on top of it, but I mean the debt and the size of government, the size of empire, the size of the military that it all has to finance. So they've stretched those finances quite a bit already.
So, well, the U.S. dollar, has, or the U.S. military, I should say, has benefited from the dollar being, reserve currency, and vice versa. I mean, really, the military is not what created money, or gave the U.S. dollar, its status in the beginning. So, yeah, no amount of force is going to be able to maintain that going forward either.
Thanks, guys. Great questions. Hope they shed some light on this whole complex matter. In closing, let me just say a couple things. If this system fails, it's not going to be because the dollar gobbles up all the other currencies' share as a reserve currency and works towards dollar hegemony. We've seen that in the data. This doesn't even make sense. If this system fails, it's going to be because the users of the system reject it, which actually has been the trend. If you look at is what the reserve, the statistic about its share of reserve currencies tells us. Aside from its long lost connection with gold, the dollar's life has been extended through through mutually beneficial relationships with many of the fiat crosses, which learned which advantages were learned through the existence of a government gold standard called under Bretton Woods, which put the dollar at the center of the whole system, and was sort of the beginning of the emergence of the politics, the interventionism, and the force that started to build up around around keeping the dollar system, even though the dollar system evolved naturally and was built on an economic foundation, and because it was always the soundest and the last soundest currency, at least in the early part of the last century. That's been slowly changing and increasingly fast after the 80s, especially since the floating rate standard has evolved. As long as the system works for the governments who use it on both sides of the dollar cross, this can last. For them, it's a question of whether what global currency is reserve currency to use that is the most forgiving and the most useful and most elastic, and that would not be gold. They would not want to answer to gold. So they do prefer the dollar, and that's what makes it mutually beneficial. The factors that undermine the system, though, include just this giant amount of debt that has and imbalances and the volatility in the floating exchange rate markets that has emerged, and the system produces this kind of system produces the debt and the imbalances and the volatility both domestically and internationally. There's some political trends also today that undermine the demand for the dollar as a reserve currency, and it probably guarantee that it has peaked in that regard. But the debt and the government buildup in the reserve currency countries in the U.S. are especially hazardous because they trap the central banks into a inflationary paradigm where they have no choice, like as in the case of Japan. Today, it has very little choice because its debt is so large that if it raises interest rates, the government will have to either inflate or default, and it probably doesn't want to do either of those things. And as far as I'm concerned, the yen and the euro today are being punished for their excursions into negative yield territory, which many people mistake for them being more inflationary than the U.S. Fed, even though the U.S. Fed has inflated money supply way more than they have. I wrote about this in the last newsletter, by the way, so if you want some light shed on that topic, just have a read through the October Dispatch, which we just released last week. But in general, though, for the yen and the euro, the monetary fundamentals are sounder than the dollars. They've inflated both of them inflated their currency less than the dollar has over 10, 20, 30 years. But this is what's driving the dollar's rally. It's not an emerging market currency collapse, at least not so far. It might turn into that a little bit later. But most of those emerging market currencies, other than a couple for other reasons, haven't really fallen out of bed. And they definitely don't have any influence on the DXY, the trade weighted dollar index that we talk about, which is a basket of basically the reserve currencies, not the other ones. There's no connection between them. There's no reason why somebody would sell yen because one emerging market is blowing up, unless it happens to be that the Japanese are invested heavily into that emerging market. But that's not the case that that dollar bulls are making today. So to be sure that the system is it's way more destructive when the dollar is weak than when it is strong. Okay, like you can see today the incentives when it's strong is towards a sounder system, towards it encourages the other central banks to stop inflating. When the dollar is weak, on the other hand, the motive or the incentive is for more inflation, which is why also you get commodity bull markets in dollar bear cycles. Because when the dollar is weak, it forces all the other central banks to inflate, just the opposite of what today is. When the dollar is strong, forces the other ones to get stronger. But that incentive works towards a sounder system. When the dollar is weak, it creates more inflation all around, again, which is why you get a commodity bull market. But whether the dollar is strong or whether it's too weak, either way, if it's too volatile for most people, the collapse of a system like this ultimately means rejecting dollars, rejecting the reserve currencies, which is basically the dollar. And in the dollar's case, that means a lot of surplus dollars are going to end up washing ashore. They're going to see a surplus of dollars in the foreign exchange market if the dollar is rejected as a reserve currency. Much greater, far greater than if any other currency was rejected, either as a reserve or even in general. I see no evidence of any new trends towards third dollar hegemony, towards what the milkshake guys or the king dollar guys or any of them are saying. Even over the last 12-year bull market in the dollar has not even encouraged any increased share for the dollar in this category. So in my view, if collapse comes, it'll be by the rejection of the dollar falling through the center of the pool, ultimately taking all the water with it, not by soaking it all up. So any rejection of the dollar and the dollar standard is going to turn its foreign exchange rate down. So in summary, just let me summarize 5 problems that undermine the dollar's viability as a reserve currency. No longer the only consumer block and no longer the only game in town. So there's a lot of consumer blocks that have risen in the world over the last 20 or 30 years. So the dollar's role is becoming obsolete. Also because better money is being created in the cryptocurrency area as well. Number 2, the dollar is the U.S. is less capital friendly and less open in terms of trade than it has historically ever been. These factors have worked to establishing the dollar as a reserve currency. So the opposite is going to erode its appeal as a reserve currency, right? Number 3, in most global asset portfolios, investment portfolios, the dollar is probably overweighted. It's definitely overrepresented. Far more people own dollars, and far more dollars can be thrown onto the foreign exchange market than in any other currency. As I said, as I've made the case for, the U.S. asset markets have been a magnet for capital flight for 12 years, and capital chases them when their relative allure is greater than investment opportunities elsewhere, which is a situation right now which nobody can see changing. But trust me, it can change just as it changes in every dollar bear market. Number 4, the U.S. balance sheet is in terrible shape. It's the world's largest net borrower. There's no dollar short argument, no argument that can, in terms of trying to establish that dollar liabilities outside of the U.S. are growing in terms of share to the point where the repayment of these loans is going to generate a dollar demand any greater than the capital flows on a day-to-day basis, right? The bottom line is that way more interest payments and dividend payments leave the U.S. than come into the U.S. Way more. So, anyways, in number 5, the dollar is increasingly unsound. It used to be way sounder than the Mexican and Canadian banking systems, but today it's about the same. All right? It's not as bad as, say, Turkey and all those other ones, but it's not. It's certainly not the least bad anymore. It's eroded this position over the decades, and shall continue to erode this position until its currency is rejected as a reserve currency, which won't happen until there's something better, and that won't mean a government currency. It's going to be a market currency. When they destroy this dollar, they finally destroy this dollar, there's going to be nothing that will replace it, except gold or Bitcoin, if it establishes itself far enough, or whatever markets choose to adopt as money. It'll be in the market's hands. It'll be in the market's hands where life started for money. Right? Money is created by the market system, for the market system, for the people, not for governments. Over and out.